So good morning, everyone. I'm Jane Morgan, the Investor and Media Relations Manager for Betmakers Technology Group Limited. Today, the company has released the FY2022 annual results along with an investor presentation. On the call today, I am joined by our CEO, Todd Buckingham, our CFO, Anthony Pullen, and our COO, Jake Henson. With that said, I'll hand you over to Todd Buckingham to run through the presentation, which was lodged on the ASX today.
Thank you, Jane. Welcome and thank you to everyone for joining the presentation for Betmakers FY22 results. This year's been a real breakout year for us at Betmakers. We've established ourselves as a global company, which now operates across more than 30 countries across the world. We've almost 500 staff now and working in 11 offices located in 8 different countries around the world. So I'd like to acknowledge the entire team across our business for the amazing effort this year. I know that when people look at businesses, they tend to look at the numbers to judge how well a company is going, and we certainly have achieved some remarkable growth on the financial metrics this year. However, I feel our biggest achievements this year has been assembling an alignment of our Betmakers team from across the world. We've been able to bring together an outstanding team of people to drive this company forward. Some of those, we've added Rebecca Giles and Anna Mason to our board of directors, who have a wealth of knowledge and experience across legal, governance, and global gaming. We've been able to assemble an amazing, talented group of young executives as well that have a wealth of experience. Over the last 12 to 18 months, we've added key members to our executive teams, such as Marty Tripp, Dan McDonald, Sam Adams, Raj Sanjanwala, and also Christian Stewart as our US CEO, along with Chelsea Abbott, who leads our P&C team. I say young because I'm the old guy in the team. And I say experience because this generally is all they've done. They've been around the online wagering industry since online wagering started. These guys have been an amazing addition to our team, and along with the rest of the Betmakers team, they'll help capitalize on the opportunity that we have created. Beneath our execs, we have been very fortunate to assemble an extremely talented team of people that are helping to drive the business, and I'm excited to see the personal growth of these men and women in the future as they continue to deliver results for Betmakers. I mentioned that in FY22 was a breakout year for us at Betmakers, and I truly believe this. We've created foundations that will set us up for many years ahead, and we're now seeing the benefits of all the hard work that we've put in over the years. And we have products that are market leading in their own right, but now have the foundation to pull these products together and deliver solutions that we believe can change the industry, a product that will allow our customers to have an edge over their competitors. Our deal we announced previously with News Consortium is testament to this. This was a landmark deal for the company as we appointed the exclusive technology and trading provider for the consortium in a deal that's potentially worth more than $300 million in revenue over the initial 10-year term. And although we signed 10 years, we expect to be working closely with Better Team for many more years than that. We're excited to work with them and their acquisition of TextBet and help them accelerate their market entry. But some other deals that we executed this year that we'd like to highlight. From Global Tote, we're selected as the Tote provider in Norway on a 10-year deal. We extended our Monmouth Park deal, Tote deal, for a further 10 years. We agreed to be the Tote interface for Caesars casinos across a number of states, including Nevada. We've already launched that deal with Caesars in Iowa. Some other things, we actually launched fixed odds thoroughbreds racing in the United States. I know this has been a long time coming, and we're excited about it, but there's lots more work to do. We've also finalized, another key thing is we finalized the development and completed our agreement with the Managed Trading Services product. We'd like to thank the Waterhouse team for helping us get this product off the ground. It will underpin some amazing opportunities for our company, and completing this deal ahead of schedule and the fact that it's outperformed our expectations means that Betmakers gets to receive the benefits much earlier than we anticipated. We've now got 22 platforms live in the Australian market and another 7 to go this year, including the beta launch. So it's a very successful product and with a major adoption across this market. Look, I understand that our share price performance hasn't been reflective of the success of the company. And I would like to thank our loyal shareholder base that have ridden the wave during this period. We also feel that the share price is not reflective of what we've achieved as well. And this is the reason that we've announced our share buyback. We've had some challenges around the timing of this buyback as we've been in blackout periods due to the accounts going out. But we can assure you that we think Betmakers is good buying at the current price, and we'll be back on the boards buying when we're in a position to do so. As I mentioned, 22 was a great year for us in development product, and we've certainly got the momentum, which is strong moving forward. But we also did a pretty good job on our numbers, and I'd like to hand over to Anthony to take you through those highlights.
Thanks, Todd. Good morning, everyone, and thanks for dialing in. I'm Anthony Pullen, the CFO here at Betmakers. If you joined our 4C webinar about 4 weeks ago, I don't think there'll be too many surprises in the results we're presenting today, but I'll run through them and through some of the key takeaways. As Todd mentioned, it's been a huge year for the company, and I think that's clearly reflected in the numbers we've reported. Revenue of 91.7 million, which is up 371% on the prior year. A lot of this growth is a result of the strong domestic traction we've seen in our platforms and managed trading services business, Todd mentioned, and also reflecting the full 12 months of owning the racing and digital assets we acquired from Tote. The gross profit of 66.3 million is up 550% on prior year, representing a gross profit margin of 72%, which we feel is sustainable based on the current product mix. And adjusted EBITDA of positive 2.2 million. In coming to this figure, we've excluded share-based payments of 71 million, which I'll cover in more detail shortly, and deal costs of 16.5 million, of which 15 million represents the advisory payment in relation to executing the NTD wagering deal. Also worth highlighting, within the adjusted EBITDA figure, there's approximately $5 million of cost we've incurred relating to growth and specialist advisory fees. These are costs that we've incurred during the period, which we see as relating to accelerating the business growth, third-party advisor fees, which we don't expect to be recurring, and also investments we've made into new business where we don't have the corresponding expected revenue as yet. I think it's also worth to be completely clear with everyone, we take a pretty conservative approach in our staff costs, and we expense them all in the period in which they're incurred. We don't capitalise any of our staff costs, and so the amortisation you're seeing going through the P&L relates to booked assets, which we acquired through various transactions such as Sportech and Dynamic Odds, etc. We wanted to provide a little bit more context as to how we're getting to this figure under the accounting standards. Simply put, when we look at the fair value of, we need to look at the fair value of the equity instruments as at the grant date. Then the total expense we need to recognise is simply the fair value of each equity instrument multiplied by the number of equity instruments which are expected to be issued. So we then recognise this total expense across the expected life of each tranche, which we have to reassess at each reporting date. So as you can see, the biggest contributors to the expense in FY22 relate to the TRIP's strategic deal performance rights, which vested on the NTD deal signing, and the Waterhouse performance rights, which vest based on the revenues we generate under the associated commercial deals. So as at 30 June 2022, we've recognised all the expense in relation to the strategic deal and the Waterhouse agreements. So looking forward, we don't expect to see any further expense in relation to these two tranches. So the share-based payment expense should reduce significantly in the future. If our listeners look at the back of the presentation, we've also got an abbreviated balance sheet and cash flow in the appendices. I won't go through them now, but just to highlight, we finished the year with 87.6 million cash and no debt. As we've noted before, we look at business and report across three key divisions, being Global Betting Services, Global Tote, and Global Racing Network. I'll just jump through each of these divisions quickly to give a bit of an overview on the financial performance of the year and where we see them heading. So firstly, we've got Global Betting Services. This division generated approximately $40 million in revenue for the year, up 179% on the prior year. This growth has primarily been driven by our domestic platforms and managed trading service operations. So it's a really good traction here in Australia. Todd mentioned it at the beginning, but we've seen the number of active clients more than double during the year just gone. We're continuing to invest in this division and expect strong growth into FY23, both on the back of further domestic growth, which includes the NTD deal, and also in overseas markets where we feel they could also benefit from this product. On the next slide, we've got the Global Tote division. This is really a large portion of the racing and digital assets we acquired from Sportec at the end of FY21. Hence, we're seeing a full year of operations in FY22, which contributed approximately $47 million in revenues. We see this division as a strong core of recurring revenues for the company. The contracts tend to be longer term in nature and far less volatile. In saying that, we had a really good FY22 and we've executed some key deals, such as in Norway and Caesars. So looking forward, I think our forecast for FY23 and our focus is really around consolidating those gains we made through FY22 and continuing to build out our Tote integrations and co-mingling opportunities. So I think we expect to see the results come through in full, probably more in FY24 and beyond. Lastly, we've got the Global Racing Network division. So this is the work we're doing with the racing bodies to distribute their content for fixed odds wagering. Similar to Global Tote operations, this is about building up our content offering and the bookmaker integrations for fixed odds. So, deals such as Penn National distribution deal, which we announced in, I think it was end of June. Those types of deals feed right into this division, as does a large contingent of our US fixed odds model. So we did about approximately 4.1 million in revenue for FY22 in this division, and whilst off a small base, we expect to see strong growth into FY23. I'll now hand across to Jake to run through the strategic focus for FY23.
Thanks, Anthony, and thanks everyone for tuning in. General theme across the focus for the divisions is certainly around execution. Thanks in part due to the deals that were completed throughout the last reporting period, and execution of those deals and that pipeline we feel sets us up strongly for growth going forward. Speaking more specifically about a few of the divisions within the GBS division, there'll be the launch of the NTD platform and also the onboarding of other contracted MTS partners. We also are really keen to expand the Betmakers' new proprietary next generation software, and we believe that this will deliver new growth opportunities and new deals that will help fill the pipeline for 24 and 25. In the Global Tote division, it'll be the launch of our Global Tote Hub. It will be the rollout of our Betline terminals, which are fitted out with custom proprietary Betmakers software that enables us to deliver products beyond just the parimutuel solution, but also fixed odds sports and racing for our partners, and basically enable them to fit out a white label solution in venue or at a racecourse. And also the further integration of our racing network content via the hub, setting up pools for that wagering. And also important to call out here, the execution of the Norway Tote deal, which is a significant build that is a 10-year deal. And the focus for our team here is on getting that all wired up and into place so we can start recognising revenues for that moving forward. And finally, on the GRN side, this has expanded quite quickly in the last 3 to 4 months, as highlighted by Anthony and underpinned by the Penn National content. So a focus for us is certainly on delivering that far and wide over the next 12 months and also acquiring more content to add to that mix. And certainly the rollout of fixed odds within New Jersey and other states will tie into this, as well as we deploy our reporting integrity and distribution services into these markets and ensure that the horsemen, the regulators and all the participants can benefit from the growth of what we think is a very exciting segment. So with that, I'll hand back to Jane or Todd, because I'm sure there's some questions that we'll work through.
Thank you for that, gentlemen. We have had lots of questions come through, and we do encourage webinar attendees to use the Q&A function at the bottom of the screen. But I might kick off with you, Todd. So was the buyback strategy implemented to combat the high level of shorting? And if so, why has the buyback stalled only after 3 days of buying back shares?
To be fair, the buyback is purely based around the value of where we see Betmakers. We've done an amazing job this year of executing on some deals, and we've got some very strong thoughts around where the company is going. Obviously, we've ticked off those deals, and if we execute on those, then we're going to see some good growth in the business. We see the value of the share price at the moment as good value, and we'll be on the boards when we're able to. We've had it stalled in regards to we did a few days and then the market stayed ahead of us. Obviously restrictions around what we can and can't do in terms of the share buyback, and then obviously we hit a period before accounts that we couldn't get on we couldn't do any buying as we were in a blackout. So we're back out of that next week, and hopefully we'll be starting to buy again.
Thanks, Todd. Jake, one for you. So are we expecting more deals to come through that will add to the growth outlook?
Yeah, certainly. I think a lot of the presentation and theme from us is around execution, and that was because we have signed a lot of deals throughout the previous period. The other exciting thing for us is with those deals is the investment and growth of a lot of our new solutions. I've obviously called out the next generation platform as well as the Betline terminals and what we're doing there as well. So we expect that to drive more opportunities and more business. And the other thing with that, I think, as you've seen throughout the period, Betmakers has been able to sign long-term partnerships with global players and serious global businesses. And we believe this is a good endorsement of what we're pulling together, and will help obviously drive that sales and partnership network.
Todd, I'll head back to you for this one. So what is the update on the US, and is it still part of the strategy?
Yeah, certainly, Jane. There's no doubt that the US has taken us longer than we've anticipated, but we're still 100% committed to the US, and we still feel this is one of our greatest opportunities as well. The industry over there is working itself out, and we're literally in at the ground level. So this year, our key focus for the US is unlocking this opportunity. And when it does, we'll certainly be ready. I believe we're in a very early stage of the US sports betting market, and it's very similar to what Australia was some 10 years ago. Our advantage, or Betmakers' advantage, is that we've been able to experience what unlocking a market looks like. We've lived through it. We've built products in this market, and we've competed in this market. So the team we've assembled not only understand this, but we're preparing for it. New Jersey is the pioneer state in regards to sports betting, and obviously now with the launch of fixed odds on thoroughbreds, and we've put our flag in the ground there, and we're very grateful for how welcoming they are and have been to all of us here at Betmakers. I think the sports betting market and the racing market in particular will evolve, and when the industry understands the opportunity that lays ahead, we'll see some amazing growth throughout the US, and obviously we position Betmakers to be part of that story as well.
Thank you. Just staying with the US now. So do we have figures on the number of downloads from the Monmouth Bets app?
Yeah, so the app hasn't launched in Monmouth yet. So it's just the Monmouth Bets mobile site and website. The app will launch over the next month or so. That's where we'll sort of introduce more content, so out-of-state content onto the app. So we'll be able to give you some more updated figures towards the next quarterly.
Just one to the News Corp Better app. So when do we expect the News Corp consortium to launch the Better app?
Yeah, I'm happy to take that. Look, we're working very hard on the app, on the application. Better's keen to launch as soon as possible. There's some things to tick off, obviously, from regulatory and compliance, and also the development of the app. We expect it to launch before Spring Carnival, and we're working hard to make that happen.
Thank you. Anthony, there's a couple for you that's come up. So do you see further improvement of the gross margin of 72% going forward? And can you comment on the company costs? So do you see this flattening out in the future?
Yeah, sure. On the gross margin, 72%, somewhere around about mid-70s, I think it's about right for our current product mix. And then in terms of additional costs and flattening out, I guess that's speaking more to EBITDA margins today and into the future. With regards to flattening out, look, I think there will be some growth going into the future, because we as a company certainly haven't finished growing. I think the more important point is the cost base we've got today is to support the business for what we think it'll look like in 6 to 12 months. We think as this pipeline comes through, as Jake spoke spoke about earlier, we definitely hope to see some leverage start coming through in FY23 at an EBITDA level.
Thank you. And just another one for you, Anthony. So do you have company guidance for this current financial year?
No, we haven't put anything out there. I think there's 4 or 5 analysts which are covering the stock at the moment. What they have put out there in terms of their projections, I think we're quite comfortable with. Yeah, that's probably the best indication.
Thank you. And just another one. So roughly what percentage of the 2022 bad debts have rolled on from 2021? What contracts do these overdue accounts relate to?
Yep. With regards to provisioning for bad debts, we generally look at anything, start providing for it, anything sort of 60 days or older. And luckily enough, there's actually not many customers at all, which we need to be concerned about. And those which are somewhat in arrears are still actively engaged with us and, sort of working through a payment plan. In terms of exactly who they are, I don't think that's relevant for this webinar. So
what is the relationship with the NYRA? So the media reports would suggest that the NYRA are trying to set up their own system that would negate any requirements of Betmakers.
The NYRA announced that they've joined up with CDI as a customer of United Tape and bought some of the Tote for that. It's quite exciting for us that they're talking about bringing the product and integrating with the sports books. So that's the evolution of the market that we're talking about. That's what we need. We need these tracks to understand the opportunity with these sports books, and that's where we feel is, once this starts to roll and these guys are starting to talk like that, then they'll realize that that's where the opportunity is. And then obviously we're there to assist with the operators like we do here in Australia.
Thanks, Jake. One for you. So can you please give a little bit more colour around expectations for other states to introduce fixed odds wagering, probably over the next 6 to 12 months, and even more so when New York might introduce?
Yep. Certainly we've seen a bit of a catalyst in the last 6 months, and certainly off the back of launching the product both on track and online. States get a lot more active in their discussions around fixed odds and obviously how they can structure legislation or regulation to ensure that everyone within the state participating in horse racing is rewarded as part of that. So as a business, we're in discussions with those horsemen's groups as well as regulators to ensure that the path they're taking is in line with our learnings in other markets to ensure that everyone is rewarded and it's sustainable. There's various states that have parimutuel betting at the moment currently, as well as fixed odds sports betting. So they'd certainly be logical places where the rollout could occur. But like everything in the US, there are some intricacies between markets. And New Jersey, for example, we've structured it as a racing bet, which sits outside of sports betting legislation. And the reasons for that was because we thought that was the best way to ensure everyone in market got appropriate returns and had appropriate control over their content and what the bookmakers were doing. So it's definitely been a catalyst. And the exciting thing is there's 35 states that bet parimutuel in the US, and there's growing past 25 that are now sports betting fixed odds. So the pipeline is quite strong for what could roll out.
Thanks, Jake. I'll stick with you for this one. So a webinar attendee just stated that they believe there's over 30 sportsbook operators in New Jersey. So apart from PointsBet, have any other sportsbooks signed up for the big bet fixed odds offering?
Not as yet. And that will obviously be announced if and when anything is material in that space. Our focus has been on launching through the partners at Monmouth Bets and Monmouth Park. And that's obviously been a long process, but happening on 3 fronts. So to roll out the on-track solution and the integration into point of sale was part 1. The website and responsive was part 2. And then the mobile app's part 3. And we believe that's the best way to roll out this product, is to give all the players in the state a sample of how it can look with Monmouth Park. And then obviously for us, it's about acquiring the content and the rights to really accelerate that. And then from there, the operators will chime in when they're ready.
Anthony, I might hand to you for this one. So how many Betline terminals have been built and currently in operation? And how many more units will be purchased and in operation globally by the end of the financial year 2022-2023?
Yeah, sure. Obviously a significant investment for us over the last 12 months. So I think we invested around about $15 million into hardware, primarily for use in the US market. The Betline terminals, I think we purchased about 3,500 pieces of hardware, and we've probably got about half of that in transit or on the ground in the US already. So internally, our next wave of execution is taking those pieces of hardware out onto track and making a decision as to where we place them. Looking forward to FY23, we're expecting that CapEx investment to reduce to about $6 million for FY23, and probably around about $3 million thereafter on a sustainable CapEx investment basis. If there is any sort of deviation from those expectations, then we would expect to see significant contracts supporting that additional investment.
Thanks, Anthony. Todd, I'll hand to you. So as a management team, how do you measure your performance, and what metrics as shareholders can we view that help assess how the business is tracking?
Yeah, thanks for the question. It's basically off Jake's slide that he went through the strategic execution of the deals that we've got in the market. So, we've got our list of internal executions that we need to do, and KPIs, but they're all based around making sure that those deals get into the market and are successful. So that's how we measure ourselves. Obviously, this year we've done a really good job in terms of increasing our base. Last quarter we ticked over to annualized revenues of $100 million per year. So an amazing achievement for our business and growing so fast. And so we'd call that success. Moving forward, it's all about execution. So getting the deals that we've announced and getting those into the market, and we'll see opportunities create off the back of that as well.
Thank you, gentlemen. Bear with me. There's quite a few coming through. So Jake, to you now. So what is the plan for Swoopstakes and Form Cruncher?
Yep. So speaking to both those, Swapstakes is a product that we've been integrating into our B2B environment. Reason behind that was obviously our acquisition of the product. We see great global application for the technology, the bet type. It's new, it's innovative, and it gets in front of customers that potentially aren't betting on horse racing yet, but will in the future. So the logic behind that is there, and for us, it's about integrating into our suite so we can apply it to the mass market. So that is through embedded technology for international sports books, but also into our platforms domestically. And with that, obviously, there's certain licensing and regulation that we need to go through to ensure that's all set up. But we've been working through that. And on the Form Cruncher side, that business is deployed within the Bet ecosystem. It has been for quite some time now. It's powering some of the content throughout our managed trading services division, but also our proprietary pricing and ratings engine, which we use for our MTS division. So already fully integrated and helping us drive new business and existing revenue.
Thanks, Jake. Todd, one for you. So any merger discussions in the pipeline, and is Betmakers looking at the Tabcorp eBet business?
Yeah, no, not at this stage. We've got a lot in front of us on the deals that we've announced, and again, we're just concentrating on that at this stage.
Wonderful. Look, gentlemen, I think we've actually covered all of the questions there. So thank you all for joining us today for the Betmakers Investor Webinar. A copy of today's recording will be available on our website and across our social media platforms in the coming days. But if we have missed any questions, please feel free to reach out via the contact details on the bottom of our ASX announcements. But thank you all for joining us.
Thank you.